day all. Ira Epstein of Linn Associates with your agriculture update for this Monday, and we're at the 25th of February 2019, about 4:05 p.m. Central Standard Time. You have an update in the stock market as we woke up to very good news that the president has pushed back the March 1st deadline between the U.S. and China in their trade talks. No tariffs going on then. The sound of it is they can make a deal sometime in March. And to calm the markets, the president immediately tweets, I mean, this was almost funny, that he thinks OPEC should not be doing what they're doing to raise the price of oil. Why choke off the world economies? And with that, the markets took a plunge in these areas. Nat gas was up a little bit. You would have thought that with a 10 million metric, I think it was 10 million metric tons of soybeans that our agriculture secretary said the Chinese would do additional right now as a sign of good faith, that you'd be up. You'd up a penny. That's nothing. Wheat down 19 cents. Corn down. The trade deal, not having that big of an impact just yet. Let's go to the weekly area chart of closes. You can see from this 925.25 area how the market is sitting here about 14 cents under it, and it still has an upside bias. As my definition is this: when a market is over the 18-week moving average of closes, as long as the close is over it, there's still an upside bias. Close under it, I have a downside bias, so it's a filter. And then when I look at the daily chart, you can see how you had this neat spike, and look at how today it gave up so much of it. You know, you got up to 934.5. By the end of the day, you were 9 cents off that high, near the lows, in fact, of the day. You still have a pattern of higher lows and higher highs, but whenever you get a piece of really good bullish news in the market, discounts all that news and nearly is lower on the day, you pay attention. Should you take out the 920.75 area, what will happen is I would then think we've got a trading range between the highs of today and this previous break low at the 905 area. Where's the battleground? I'm going to still say it's the 18-day moving average of closes in red. The market tried to stay over it, couldn't do it. By day's end, it closed right under it. So the market's caught between the green line. Yeah, there's slippage on these lines, but it's the general idea of the 100-day average and the 18. When I put in the Bollinger Bands, other than hitting lower Bollinger Bands, you haven't been able to get up to a high one since the beginning of February. It's not that far ago, so let's not get carried away. It's 3 weeks ago. But the market today was disappointing, and I think the bulls went home with that general sense of that. In terms of momentum, it's up. Bias is down since you're under the 18-day average of closes, and the swing line is up. So what the market needs to do in order to get back on track, if it's going to be a bit bullish, is not take out, in my opinion, 920.75 and start closing over that 18-day average of closes. The meal market looked pretty terrible. Another challenge of the 18-day average and just can't get through it. Remember my theory, when a market is far away, be it to the upside or downside, often the area the market goes back to figure out what to do next is that 18-day average of closes. I've seen it in the stocks. Anything you can chart. Use it. You'll start seeing that this happens. Do certain markets work different ways than others? Not really. They might in terms of how often do they get above or below a Bollinger Band, but overall it's still going to be 95% of the time they trade within it. When we look at soybean oil, the market today at first had a good day. It was up to 31.16. By day's end, it was near the lows at 30.68. Take out 30.62 and you end up with a higher high, lower low, under the 18-day average, back to a neutral stance. In the corn market, I don't know what got into this, but take a look. Last night you got up to the highest high we've recently gotten up to, but into this general resistance zone. And what I can't get away from is the fact that if you really focus on the 18-day average of closes, you've only got a small grouping of days here. Otherwise, you keep hitting that number, and you're getting whipped back and forth as the market's trying to probe the downside, not paying that much attention to the upside. In the wheat market, this has been a market that's just simply fallen out of bed as there's a race to get U.S. wheat down to a price level at which it's competitive on the world stage. You're not through, apparently. You've got the lower highs, lower lows. You had 3 or 4 days here where you closed under that Bollinger Band, got to the right-hand side, and now you're plunging. In addition, if you take a look at momentum, both numbers today are under 20. They were both under 20 yesterday and the day before. This is bearish. This means that you still have the embedded readings at work, and until they're lost, the market on rallies is probably going to find sellers. In the sugar market, the market has got the swing line now with lower highs, lower lows. I think you'd agree the upper Bollinger Band did its job. It held prices back. Momentum is turning down here. If this market drops some more, you've got to take a look at how does it respond to the 100-day and the 18-day average of closes. What bothers me is with the market already with lower highs, lower lows, any close under the 1283 level gives the bears complete control. That will give the market in a downtrend. Bias is down, momentum down. In the coffee market, coffee's still having trouble on rallies, and I would expect that to continue unless and until you lose this embedded reading. This rules the day as far as I'm concerned. In the cocoa market, been pretty wild trading against the 100 and the 18-day average of closes. With today's action, you've got the lower highs, lower lows. The settlement today at 22.56 is under both the 18 and the 100-day average of closes. As of the close, the bears took control of the market. You'd have to get back over the Bollinger Band high almost up here, and if the market lets go, you could be targeting 21.91 on the downside. In the cotton market, yes, we had a nice rally, but for the past 3 days, we seem to be stuck at this 18-day average of closes. You finished tonight at 73.10, which is under the 18-day average of 73.33. So while the swing line is up, the bias is down because you settled under that 18-day average. And momentum, while it's pointing up, it's not shooting to the upside. It's more a bounce in a market that didn't do all that great. In the cattle market, a good gain today, back though into the resistance of the upper Bollinger Band. The cattle on feed report looked basically friendly. You've got the higher lows, higher highs, but buying a Bollinger Band, you're never going to hear me say do that. I don't say in this update that you buy or sell anyways. I do that in my morning subscriber video, but what I do say is I don't think you find new buyers against Bollinger Bands most of the time. The feeder cattle market is going flat on you, fairly neutral right here. You settled over the 18-day average. You're at 145.65, but the trend is down as measured by the swing line, and you've got momentum drifting down. So a market that's mixed is a good word for it. And in the hog market, again, even a Chinese announcement of a trade deal did nothing to lift this market. Lower highs, lower lows. The freezers must be just full of pork because prices are so cheap. You know, one of the things that we try to do with you is put together kits or ideas that you can work from. And our futures trading kit we put together maybe 3 months ago or so. And it's got all these different neat chapters in it because it teaches you futures. 10 trading rules, chart patterns, our concepts on money management, technical analysis, then the intro to options and all the different exchange brochures from the CME group. What we do is we don't copy them or any of that. We point you right into their site so you can take the quizzes to learn, you can read about the different things that they've got. Who's going to write better about an exchange than an exchange? So it gets pretty simple. But you'll find all these neat different chapters in how you work with it. To go with all this, we offer our charting software, even our mobile phone app that works on both Android and Apple operating systems. Then, different little videos that we've put together, one on the Arun indicator, other on pivot point series. So you're getting something to really refresh everything that you're doing. While you're up there signing up, by the way, for any of this, what you can do is look at our other listings of offers and take advantage of those as well, because we really offer an awful lot for the futures trader. I'm going to be starting doing new types of metal reports for you too, video ones. So I'm going to probably do my first or so this week, so be ready for that. And that's different. Normally I would write my metal reports. I'm going to try to use video more and more. It plays in our phone app. It plays on your computer. I think the pictures and me talking tell a lot nicer story than whatever I'd write. So how do you get this? give us a call. Go to our website. You'll see our carousel of free offers. Click on any of what you want, or you can click up here. If you're watching me on YouTube, it'll take you right there. I'm Ira Epstein. Have a good day.